So, first of all, what do we got? We've got a trend, which is a downtrend here, and that's the important thing. It has to appear in the right place, and the right place is after a movement. Now, there needs to be a considerable down movement or a considerable up movement. Now, exactly how big that considerable movement is going to be, well, you know, it's a bit of a moot point, but it does need to occur in the right place, and that's at the end of some sort of move. And once we've actually found that we've got a low, and we will only know we've got a low when price does a pivot up, so it moves on up. And then we mark that up as being 0.1. Now, at some point, we're going to get the next point. So it pivots on up, then it goes up to another point at which price then pivots down. Okay? And we never quite know how far this is going to go, but it just pivots on down. And the important thing is that we then get a third point. And price has moved up, it's gone up to a high. Alright. Pivots on down. 0.2, it pivots back up again. 0.3 comes up to a level where it has attempted to take out the old high. It's attempted to move above this little consolidation zone, but it's failed, and then of course it collapses on down. So there we are. Works in both bull markets and bear markets, and it's most reliable then after a significant move. Now then, before we actually get into looking at some of the detail, I always link this up with a bit of candle analysis. Now, I find candles particularly useful for giving me the fine-tuned entry point. And all we're really looking at here is just a comparison of a West bar chart with a candle chart. And quite simply, it's telling us exactly the same story, except that the candle chart is somewhat more visual. And as you can see over here on this this chart, we've got the high, which is a bar chart with a long tail, where the open and the close are pretty close to each other, followed by inside a pair of inside candles, inside the extremity of the large up candle. Now, just looking at this on a candle chart, then what we're actually seeing then is a slightly different depiction, and it's clearly showing us that we've got a shooting star. So a shooting star is a candle with a long tail. It's gone higher, and the sellers have actually overwhelmed the buyers there, and it's pushed price on down. And then, what do we got? In candle terms, we don't actually call this inside an inside candle. We call it an Hallmey. A Hallmey. Now, one of the patterns that individual patterns that I really do like to trade off is the engulfing. Now, an engulfing pattern is the exact opposite of the Hallmey just been looking at, where price goes higher, sellers come in, they completely overwhelm the buyers, price is then pushed lower than the close and indeed the low of the preceding candle, and then, of course, what has actually happened there is that all of the buyers that were in that preceding candle have now been taken out, and they're all looking a little bit old-fashioned, and they're a little bit worried about what's going to happen next. Exactly the same thing in reverse down here with the bullish version. And what we've got is again a downtrend. We've got this narrow range candle, which suggests that it's running out of steam on the downside. And again, we've got buyers completely overwhelming any of the sellers there. Now, this frequently will result in an up move. But again, with an engulfing pattern and a shooting star, it needs to be seen in the right place. And the right place is after a multi-bar or multi-candle move. Right, let's look at one or two others. Now, the opposite of the shooting star is a hammer. Now, we've got a shooting star down here at the bottom of the chart, which clearly occurs at the end of an uptrend, and then on this one up at the top of the chart here, we've got a downtrend with one of these candles which has gone lower. It's gone lower, but then a whole load of buyers have come in. They completely overwhelmed sellers during the formation of the candle, and it has then closed higher, and it closes with a small body. Now, in general, I find that hammers are a little bit more reliable than shooting stars, and again, as with the engulfing, the key thing here is to identify the pattern, and then it is the candle after the hammer which is the important one, and that may well result in a trade. Yeah, it's quite interesting. Gaps in currencies, we sort of seldom do get gaps, and we would sort of probably not get too hung up on if a gap occurs or if it doesn't occur, or indeed if the green part of the candle there is only a very small one. It might just be an open close in the same place. It might become a doji. It might even have a little bit of red in it. But the key thing is it's the length of the tail. And the longer the tail, the better. The longer the tail, the more powerful the hammer. And that's a general rule which is well remembered. And if there is a fair old bit of green in here, then yes, again, it is providing probably a little bit more weight to it. But for me, it's the length of the tail is the important feature. Right, now just to check out the Hallmey once again. After a down move, we've got this inside candle, or indeed it's a candle which is within the extremities of the preceding one. Purists will probably want it to be within the body of the preceding candle. Doesn't matter a jot to me as long as it's within the extremities of the preceding candle. And of course, again, in common with the others, the key thing is which way is it going to move out on the next candle. Okay. It may well just be a very tiny candle. It may just be this little sort of doji candle that you're going to get at the end of a move. But the key thing is it's an indecision candle. Okay. Now we're going to look at time frames in a minute, but first of all, I just want to present this chart, which is adding to some of the evidence that we've got. Now, I consider all of my trading, I'm just gathering evidence the entire time that I'm sort of looking at charts. And when the evidence really does add up, and it's sort of reasonably overwhelming that I've got enough evidence that it's moving in a particular direction, then I'll take the trade. So let's just look at this for a minute. We've got various things on this chart, but the key thing is we've got support resistance zones. Now, just over here at the bottom, we've got an area where prices actually popped up, and then prices come down from there. So there's resistance. Price then eventually moves up through that resistance, just slices through, goes on up, and eventually it comes to a halt. Well, it comes to a halt, and when it comes to a halt, then we can pop a line across and say, right, well, for some reason there are some resistance there. Now, there may be a previous fib line. It might not the case with this one, but it might be a round number, etc. There could be all sorts of reasons as to why that is, and we would have to be looking left on the chart. Now, we haven't actually got that to look at the moment, so let's just go with what we've got. Price then came down, and it formed a little bit of a bounce here and popped up, so there is some support. Price then moved on down, and as you see, it's now moved down. Where did it go down to? Well, that former area of resistance. So resistance often becomes support, and support often becomes resistance. Now, that happened on the way back up here, okay? So we've got this little area there where price paused. It paused where there was that previous support, and then eventually it pushed through. Where did it go to? It went up to the preceding high, okay? Came down for support where there was that resistance area. And then, of course, prices sort of moved on, and this resistance area could subsequently become support. So I like to link up a number of things here. And as you may well have identified already, in the area of this, in the middle of the chart, this support area was characterized by this pivot having an Hallmey. Okay, see the little blue candles and a harami, and then the subsequent candle completely engulfed the harami. All right. Now that in itself is probably not enough evidence to go long, but at least we're adding together a little bit of support resistance evidence, a little bit of candle evidence there. We've got 2 bits of candle evidence that just maybe a reversal is on the card. The next thing I'm looking for is what is going to happen as price moves on up. Well, it pops up to this level, does not manage to take out the preceding lower high, but it comes then down for support and actually finds that support. So we've got a red bearish candle coming on down. Then we've got this blue candle, which has gone lower, would have been red at one point, then it turned blue, and that now forms the multi-point. So we've got point down here, number 1, point 2, point 3, and then as price moves up out of there, then that is the buy, right? With a stop underneath the preceding candle. So we've got 1 or 2 things added together. Right, now let's just look at 1 or 2 other examples. Now, again, this is a charter cable, and over here on the left, we've got down move, we've got 1, 2, 3 points there, and point 3 is a very convenient pivot in that it completely engulfs not just the preceding candle, but as you can see, it engulfs the preceding 3 candles. So a very, very powerful buy signal there coming from that engulfing candle. Now, the aggressive trader may well take the long as the preceding candle is engulfed. But one might want to wait for a little bit more confirmation. And it comes just there. In that, what we've got is a narrow range candle, harami candle, and there's yet another buying opportunity after that. And then subsequently, we've got a number of narrow range candles and then a move on up. So there are quite a few opportunities after the formation of the multi-point reversal for the trader to actually get in on the trade, and then it moves on up. Now, as you can see, as this develops, there is, particularly here, an equal and opposite 3-point reversal. So we've got a high with a candle which is looking a bearish candle in that it partially engulfs. It certainly engulfs the body of the preceding candle. Then it goes down for a pivot, a hammer. Then price pops up and completely engulfs. So we've then got a 1, 2, 3 multi-point reversal in reverse. So when we see one of those, it's completely negated the original multi-point reversal that actually got us into a long. Price then goes on down, and lo and behold, this move comes to an end with a hammer. And then that sets up, as you can see with these red arrows, pointing up. Point 1, point 2, point 3, and off we go again. And this next multi-point reversal is very, very similar to the very, very first one that we came into. Right, now let's move on. Right, this is the euro having moved on down, and it moved down in a series of 3 waves, and Elliott wave watchers will recognize an ABC pattern where C came down to be a measured move, measured at the same vertical distance as the distance traveled by A. Now, the important thing down here is that eventually price came to a bottom. How do I know it's a bottom? Because price has not subsequently gone any lower. So we've got a pivot. Price then sort of popped up, pivot back down again, and then it formed a very, very strong engulfing. So, yeah, there may well have been traders who would get in at that point, and it would have been perfectly valid to do just that. But subsequently, price did come down a little bit lower, but at no time did it actually break the preceding low. And it did so when it did go to a new low. It did so with one of these bullish engulfing candles. Now, what you can actually pick out here are a whole series of points. So without a doubt, this is dropped into a consolidation range, but at no time did it go to a new low. So that just characterizes a consolidation range, bounded between a low and a high, but within it's got bullish candles. Now let's just look at getting some trades on here. This is a true multi-point reversal in that we've got point 1, point 2, point 3, point 4, point 5, point 6, point 7, point 8, point 9. So there are 9 pivots within this, and this is bounded within this trading range, and then price starts to move higher. Now, one of the key things is with identifying these reversals is to spot where the low is, spot the higher low, followed by another higher low, which is in turn followed by a higher high. So the trend is now moving to an uptrend, and then finding the entry point with relatively narrow range candles. Now, simple reason that I like narrow range candles, it means that I can get the trade in as price subsequently moves above a narrow range candle, and I can get a trade on with a relatively tight stop. Now this just happened to be a daily chart, so each one of these candles is one complete day, and as you can see, the number of pips is quite considerable, so one would clearly be adjusting position size to cope with whatever the stop loss would need to be. So, where would you enter? Got a narrow range candle there, followed by an engulfing. So we've got an engulfing, narrow range candle, which is Hallmey, and then we've got the breakout candle from there. That is the candle to gauge your entry on. Okay. Now, those traders who want further confirmation that this has genuinely moved out of the trading range, then another opportunity comes there at 2. And at 2, we've got yet another narrow range candle. It's in Hallmey, and then the breakout beyond there. Where would a trader want to put a stop? Well, just below the narrow range Hallmey candle. So you're quite right. Just going back there, Jez, that yeah, we've had this move on up, and in fact, one may well, on the basis of this candle completely engulfing the preceding candle, one may well have gone long there. Well, absolutely, yeah, why not? You go on long, but then of course it does reverse on back down, comes back into the trading range, and of course that's the preceding shooting star there. So one may well have gone long at 0.7 there, and of course money management would have ensured that the trader would have been protected, and then of course price came on down. Now if the trader still had a piece of that trade on, as money management would suggest that he or she should, then when we start to get this further consolidation here at 0.1, one could add into it, and then from here price up it goes up to 0.2, and there's yet another opportunity to add further into this position. So this sort of pattern is one that does lend itself to scaling in to build up a position. But at the same time, as momentum dies, partial profits can be taken. And in a subsequent session, then I'll be going into money management in somewhat more detail. Right, now let's go a little bit further. Right, what we're looking at here on the 15-minute chart is one of these 1, 2, 3 multi-point reversals. Now, previously we'd actually had price moving on down, okay? Price moved on down, and we then have got a pivot, which is a low, followed by a move up, which just happened to take out the preceding lower high, and then on down 2.3, which was followed by and Hallmey. Okay, so we've got point 1, 2, 3, Hallmey, and the trader may want to go long at that point, okay, with a stop, and the stop is going to go down here below the Hallmey. Price then moves up in a series of waves, and at no time have we got an equal and opposite multi-point reversal. Price then goes up. Eventually, this move comes to an end on a shooting star. Okay, so we've got a shooting star that forms point 1, down to point 3, 2, up to point 3. So we've got the pivots at point 1, point 2, and point 3, and then subsequently price just comes on down. So what does the trader do there? Well, close the position, close the long, and then get repositioned to potentially take a short. And that's exactly what this one is showing. So this, first of all, we've got to identify a pivot, okay? A pivot low or a pivot high that retraces and comes back, and it's going to form 3 or 5 clear levels or pivot points. Enter the trade immediately following point 3, 5, 7, or 9 using the added confirmation of the correct candle formation, a hammer, Hallmey, maybe an engulfing candle. I haven't mentioned Fibonacci, but I do use Fibonacci as well. It may well have bounced off of Fibonacci. And of course, money management is the important thing so that one can scale out, protect an account, and of course, maximize profit. Right, okay, now let's just go and look at some real charts for a moment. Bear with me. And let's just take a little glance at the dollar index. It will present itself in half a mo. Now, with any luck in a second, yeah, bear with me guys, this should be presenting itself. Right, so with any luck, that is now presenting itself. Fine, that's great. That's great. Right, okay. Now, this is a 15-minute chart of the dollar index. And what I want to just highlight down here over on the bottom left is that clearly we've had a bit of excitement with the dollar just recently, and yesterday was great fun for cable traders. But I just want to highlight this white candle, okay, which is the low, and also this should identify clearly what an Hallmey candle is. So immediately following the white candle, there's a green candle, which is within the extremities of the white candle. All right. So we've got the low, got the high, and the green candle is within the extremities of it. It's an indecision candle. It's where the market is really saying that I don't really quite know which way I'm going to go next. And wherever price follows on from the Hallmey candle, then that's a pretty good indication that that's where we're going to be going next. And that's exactly what does happen. Price bounced up very, very strongly, and as you can see, it bounced up after a pretty hefty down move. Right, then it popped up, and it popped up to yet another little white candle there with a very, very long tail. Now, I said earlier that I do like long tails, and that is a shooting star. So, again, that's just laying down the marker that price is not going any higher. It is followed by yet another Hallmey, okay? After that, we get another Hallmey. We've got a double Hallmey. Price breaks on down below. So we've now got pivot point 1, pivot point 2, and price comes down for what looks like it might be pivot point 3. Well, what do we got then? We've got a little triangular trading range, and at no time did price really shoot strongly above here, but we've got this little engulfing. But then price moved on down, and it moved on down fairly late in the evening. Now that white candle is followed by an Hallmey, and of course now you can see what we've got is a fifth point. So we've got point 1 down here at the bottom, point 2, point 3, point 4 as price attempts to move out of the consolidation. Then finally we've got point 5, which is the low there, followed by that Hallmey candle. And of course then price moved on out. Where is the stop going to go? Well, it's going to go underneath the Hallmey candle. And then, of course, subsequently, price just kept moving on up. Now, we'll just switch this over to another instrument. And in just a second, we should get the British pound appearing. And this shows the price action of yesterday. Now, price action yesterday moved down a really quite unprecedented number of pips, 400 pips, which is around about, it's almost 3 days worth of price action in one. The white candles just pick up the pivots. It's a little indicator that I use. And it forms following the bottom. So it doesn't actually form on the candle, but subsequently as price moves up, it does. Now, really what I wanted to illustrate here is that when price crashes down, as clearly it did yesterday, then what have we got following the crash down candle? We've got an Hallmey, and we've got a series of candles which are relatively narrow range. So the very, very low becomes point 1, comes up to eventually point 3, picked out by a white candle, and then I've got, point 2, and then I've got point 3, again characterized by a white candle, followed by a narrow range candle. Well, very, very often when you get a violent pullback, a violent collapse, and this is the pullback, then these multi-point reversals can be really quite useful. And that's exactly what did happen late afternoon yesterday, that there was a very, very useful move back up, which was worth getting on for 75 odd pips. Subsequently, overnight, what do we find? Well, we got a high there, picked out by the white candle. Comes down to a low, so we've got a point 1, a point 2, and then price popped back up, but it did not manage to surpass any of the little highs formed there. So we've got 3, and then of course subsequently overnight, for those people who may well be in a Far Eastern time zone, an excellent trading opportunity to then just trade this one on down as it moved out of the consolidation. Okay. And then this morning, what actually happened? Well, we could look at this, and we will look at this in a second in a smaller time frame, but eventually price came all the way down to this 148.50 region. Got a white candle there again, moved on up, so we've got a point 1. Then it moved up, attempted to make a new high. It attempted to break this preceding lower high. So that gave us a point 2. price then came on down, and it came on down, and it formed a hammer pivot at point 3. And then, of course, as you can see, there's been, again, quite a useful move on up, which just on that first swing was worth about 50 pips. Right, now I'm just going to bring this down to, let's bring it down to, say, a 3-minute chart. And then we can see things in just a little bit more detail. And it's worth just noting this morning that price action, first thing this morning, 6 o'clock, just after 6 o'clock, price attempted to go higher. What did it do? It actually engulfed. Now this is one of these situations where this is not quite a textbook 1, 2, 3, and it actually turned out to be a little false break higher, but it's still got the characteristics of a 1, 2, 3. But also note that although price did go higher, it did not go higher in terms of closes. Narrow range candle. What does the trader do? Well, just got to put a short on at this stage. Where price had actually gone up, it had found resistance. It had found resistance in the area of prior price action, and on down it has gone. Now guys, I'm not entirely sure this is actually being recorded. I understood it probably was going to be recorded, so you may well be able to get access to this afterwards. Right, so on down it went for a very, very useful early morning trade. In fact, that was my breakfast trade this morning. And then what happened after that? Well, we got a low, again picked out by the white candle. And you can see this formation. We've got a low, pivots on up. Where does it go to? Well, it attempts to move higher than some of the preceding lower high candles. Didn't actually manage that. On down it came, another pivot higher with a long tail candle that more or less it did engulf the preceding candle. So there we are, we've got formation. Pivot number 1, pivot 2, pivot 3. After that, what does the trader do? Well, there's only one thing for it, and that's where the trader is going to be looking for a potential long entry. Now, as you can see, each one of these squares you can probably just about see behind is worth 10 pips. Well, that move was worth 40 pips as it moved on up. As the momentum dies, then the trader is going to be taking partial profits and then looking for the next opportunity. And it came almost immediately afterwards. You see the low there? The low in the region of this previous peak at 2. Price then popped up, pivoted up. So we've got a point 1, a point 2, and then subsequently a point 3, and then price shot on up again for a similar sort of movement. So you will see these absolutely all over the place on charts. Things like cable performs particularly well, and cable, the mere fact that it's got volatility and that it moves a fair way in a short space of time means that it's a very, very useful instrument to use with this one. Now that does seem very simplistic, and it is simplistic. It's very simplicity that a number of people say, oh, no. They want complexity. Well, I don't want complexity. I actually want simplicity. If I can see something that's really dead simple and it works, I'm going to trade it and make full use of it. Now then, yes, I do use fib as well. And after a little while, you get used to where these fibs are. You can see that on this first move up, price came down to the 50%. Okay. We could actually put the extension grid on and just look at the move that went up to there and project it forward from there. And there we are, it popped up to one of the fibs. It popped up to a 78.6 at that point. Again, let's just put the fib on and put it down to here. Where did price come down to? It came down to 61.8. So if I can see that any of these points are at a fib level, then that gives me just a little bit more evidence. I tend to blow hot and cold with some of the indicators. Slow stochastic can be quite useful. A MACD with fairly low numbers rather than the standard 26.926, then I'll probably bring that down to sort of 26.3, and that can be of some help. But I like to keep it simple, and as you can see on my charts, I've not got lots and lots and lots of indicators. I like just to observe price action. And by looking at things just like that candle evidence, as we can see there, we've got a superb hammer, and if you can identify a hammer with a number of candles that then sort of move up, form something of a narrow range, following the narrow range, the trader can get in. And then just over here, let's just look at this formation that formed before 11 o'clock, just before we got started. Then what is this? This is yet another multi-point reversal. The white candle is the first low. Then it popped up. Then it came back down, up again. We've got a 5-point MPR here, and off it went. It went higher. Right, euro yen. Yeah, I mean the euro yen is a great one to trade. Right, Porky. Yeah, the 357. I mean, if you just pick out the points, let's just do this on the euro down here. So we had a brilliant move down this morning. Excellent breakfast trade. On down it came. Breakfast trade is the thing I tend to specialise in. But then just before 9:30, we've got the white candle, and let's just look at this in its entirety. The low is 0.1 for me. It then goes up for a 0.2, 0.3, 0.4, and 0.5. And as you can see from these, it's just after the uneven number, okay, that I want to be long. And indeed, this is 0.5. This is a pivot without a doubt. It completely engulfs that preceding candle. And then what happened after that? Well, price moved up really, really strongly. Now, it's entirely possible that the trader may well have got in somewhat earlier. So if we call this 0.1, we call that 0.2, and then pivot 0.3, well, it's a long tail. It's got a hammer. So why not go long at that point above 120? Okay, the momentum dies out here after around about 25 pips, but money management would ensure that the trader is going to get out part of the position. And then, when the trader sees 0.5 form, well, why not just buy back what was sold up here, add to the position, and just roll with it. Now, what is actually happening right now? Well, we've got a top. Okay, that could be 0.1. We've got long tails, and we could have price then deciding that it's not going to go any lower than this particular point. So there was a potential multi-point reversal here, actually in reverse, but at the moment that's being negated as price moves on up. So indeed what we've actually got is 0.1, 0.2, 0.3 with an engulfing, followed by an Hallmey, and on this current candle forming, there was a potential entry as that little Hallmey was actually broken on the upside. Now, I've mentioned breakfast trades. Well, there are a couple of times, well, probably 3 times of the day, which is the best trade. First thing in the morning, when the Europeans are getting to their desks, and the other time of day is when the American market is in full swing, which is around about 3 o'clock. So if you observe your charts around about 3 o'clock, then you'll find that there are plenty of opportunities there. Right, now you're just asking Store about the euro. Well, the euro very, very similar. Just look at this move from this morning, and well, we can just see that with hindsight it's great. Well, let's just roll this back so we haven't actually got the hindsight to actually look at. So what the trader might be looking at here is a downtrend. So the bias is generally down, but there is this pivot low with an Hallmey. Price then sort of moves up subsequently to pop back on down. So we've got 0.1, we've got 0.2, then we've got 0.3, potentially 0.4, potentially 0.5 there. So the trader might have been looking at this for a move on up. Now, has it followed through? Has it followed through? Well, it hasn't really followed through yet. In fact, what actually happens is that it just fails. It just fails. Then, this point at which the trader might have been really getting quite excited, thinking that this was going to be the pivot low that just might lead to much higher levels, price then actually took that out. So the pattern is negated. So what are we doing now? We're looking now for a 1, 2, 3, a bearish 1, 2, 3. So there you go. We've got the high, 0.1, 0.2, 0.3, narrow range candles. What have you got to do? You've just got to go short. And then, of course, subsequently we can see what did actually transpire as we just let this chart roll along. Right, okay, now 3-minute chart or an 89 tick chart is really quite a useful one to pick out some of these short run scalping trades, and 3-minute chart is certainly my preferred chart. Okay guys, well that's it. That is the multi-point reversal. Just look for the pivot high or low. Right, here we've got a low, very definitely. Point 2, where we've got a pivot where price comes on down, and then we're looking for a third point where price then is going to pivot back on up, and here it engulfs. Now this engulfing provided an excellent entry point. Where's the stop going to go? Just underneath the engulfing, and away we go with a profitable trade. So keep it simple guys, just use things like numbering these points, use a little bit of candle analysis, a little bit of support and resistance, and the trader should be able to make money there. Okay guys, right, well many thanks for that, and hope to see you again here next month when I'm actually going to be talking about Fibonacci with Elliott Wave. So they're just 1 or 2 more bits and pieces of analysis that I tend to use in the toolkit. Bring them out every now and again, dust them off, and it's just a question of using the right tool for the job. Okay guys, thanks a lot. Thanks for listening, and we'll speak again soon.